Chinese real estate giant Evergrande, not so grand anymore. Is the world economy about to be rattled due to the possible collapse of the Chinese real estate giant Evergrande? How bad is the situation, and can it lead to a global recession? Should you be worried about your investment portfolio? Stay tuned to get the latest info. Welcome to the World Econ News. Don't forget to subscribe to our channel, like this video, and hit the notification button to get updates and information about the latest international economic news items. So without further ado, let me introduce you to one of China's true corporate giants, and when I say giant, I really mean it. Evergrande was established in 1996 by a Chinese businessman called Zhu Jieyin in the city of Guangzhou in southern China. Since then, it's been steadily growing, expanding operations and gaining more market valuation at a rather scary pace. It has subsidiaries all over China, and it's branched out in many areas. Other than its main real estate business, such as food and beverage manufacturing, making electric cars, TV production, consumer products, and, well, you name it, they're into it. You could say that as China became the world's #1 manufacturing superpower in recent years, Evergrande was becoming the superstar of this impressive status upgrade. Of course, it was an easy ride for Evergrande. What? You expected me to say it was an uphill battle filled with obstacles and endless innovation? No. Evergrande, like many other Chinese corporations, capitalized on the state's unprecedented shift from a heavily regulated socialist system to a free enterprise system, aka capitalism. A period that, until very recently, was a true borrowing and bonds issuing heaven. Only Chinese corporations were allowed to borrow recklessly from the banks, while the banks were encouraged to lend excessively. And whenever a bank told a corporation, that's enough, the corporation would simply turn to issuing bonds to raise funds. The government of China overlooked that behavior and merely advised all parties involved to be careful. What? You expected the Chinese government to be harsher? They simply didn't want to, because they were only concerned with keeping the economic growth wheels turning as fast as possible. So what happened? Well, since COVID-19 began, the Chinese and global economy slowed. The crisis in the supply-demand chain, along with inflation, complicated the picture, and too many Chinese corporations began filing for bankruptcy or asking the government for assistance, mainly due to debt. Evergrande is no exception. Its debt exceeded $300 billion at some point in the past 12 months. Its operations were being rattled by COVID-19, yet it continued borrowing instead of slowing down a bit and maneuvering the changing local markets more carefully. It even kept issuing bonds to raise more money to expand further, and obviously it did a terrible job in calculating the correlation between its market capitalization of a mere $57 billion at its highest in 2018 and the value of its assets, aka liabilities and debts. It just kept expanding with borrowed money until it hit reality. The reality of, screw you, pay me my bond's interest, and where is this month's loan payment? Evergrande is a classic case of yet another Chinese giant defaulting on its debt payments. So, is Evergrande too big to fall? The Chinese government's response and signals are strong. Yes, it's too big to fall, and it will be rescued. This is happening right now because the company has just made another $1.2 billion payments in bonds, interest, and loans. Money that magically appeared after Chinese President Xi Jinping was seen in a gathering with his friends from the Chinese Communist Party. This leads us to the second question. Why is it too big to fall? Because it's a giant corporation that employs more than 200,000 people and indirectly nearly 4 million people. Yup, more than 4 million indirect jobs. That's how big it is. If it went bust, it would drag more than a few banks down with it. And there is the fact that about 1.6 million Chinese families are waiting to move into housing units that they purchased from Evergrande. Okay, I've just decided I'll tell you more about its mad size. It owns more than 1,300 big real estate projects in over 280 cities, while its property services management arm is involved in a few thousand projects in a few hundred Chinese cities. And hang on, there's more. If Evergrande collapsed, the Chinese financial system will rattle and become a nightmare for any corporation that wants to borrow money or issue bonds, because the banks will have no choice but to tighten their lending policies, or they too might find themselves sinking and asking the government for some handouts. I can see Xi Jinping not smiling and throwing some curses here and there, and of course, the bankers don't want to go to the dungeon. So now comes the tricky question, who's to blame? The answer is simple, no one. Now you're wondering, what the hell am I talking about? Look, it's just capitalism. Whether the government heavily regulates it or decides to let it fly free, in both cases and by all means, the government is not doing anything wrong, nor the corporations. Now hold on a minute here and ask me why. Okay, markets and competition, that's all. If the markets and competition dictate the need for loosening the leash on corporate behavior, then the governments will act accordingly and vice versa. Look, it's all economics, and by the way, regulations are not laws, they're designed to be flexible and fluid. You remember how I said earlier that the Chinese government was tackling the issue of reckless borrowing and lending by merely saying every now and then to the banks and corporations, "Be careful." Well, in the past 2 years, the Chinese government has been trying to find a way to scare the banks and corporations out of reckless behavior and reliance on the government in hard times. The Chinese government could not just bark military orders. By the way, military orders in China are still common. So it's been capitalizing on the fall of corporations by forcing them to restructure and implement some planned behavioral changes in the business realm, meaning it used them as an example. And yes, some people went to jail, hence the settled smirk on Chinese President Xi's face. I wonder how you say tighten the leash in Chinese. Many of you have heard how rating agencies such as Fitch specialize in rating companies' financial risk. Fitch declared Evergrande in default after it missed yet another deadline to pay investors' interests on bonds on December the 6th. This mere announcement by Fitch caused all hell to break loose and panic by investors and banks, mainly in China. So I'll give you some good news here. Defaulting does not mean bankruptcy, and in reality can represent an opportunity for a corporation to offload some burdening assets, restructure, make wiser financial decisions, tackle internal corporation issues, and get a spanking new leadership that is more fit to guide it out of stormy waters. The size of Evergrande and its immense assets portfolio, along with some government aid, will get it back on track in months. So go ahead and have a good night's sleep, because all experts agree that the Evergrande crisis will not cause anything that is even remotely close to a global recession. Why? As I said earlier, the Chinese government has already intervened and the company is already restructuring and possibly consolidating its debts. I'll not assume anything regarding payment of interest to local and international bondholders, but again, a payment was just made, hence, you too should not be too worried. And by the way, sorry about keeping this part out until now. Evergrande's operations are located almost entirely within China, and most of its bondholders and lenders are also Chinese. US investors hold less than $20 billion worth of Evergrande bonds, which is a very small figure when you're talking about the global economy. Other international Evergrande bondholders combined hold less than their American counterparts. As for lenders, the lion's share of Evergrande's $300+ billion liabilities are from Chinese banks. So why is the mainstream media making such a big deal out of it? Well, do I really have to answer that question? They're simply obligated to do so. And there's also the factor of using fear to attract audiences. Another reason for the panic is the fact that 30% of China's GDP is from real estate and related services. Many analysts failed to capture the chatter from China's top leaders over the past few months about convincing more investors to divert from the real estate sector to other sectors. especially the technology sector. Oh boy, I can see the smirk on the faces of the not-so-communist leaders of China's Communist Party. If we take the level of secrecy in the Chinese government and combine it with the cool, silent handling of the Evergrande fiasco, I wouldn't be at all surprised to find out they knew it was going to happen and simply did nothing in order to achieve the goals I talked about earlier regarding tightening the borrowing and lending leash, in addition to diverting investors to where more cash is needed. I'm speculating here. They might as well have been shocked like you and me when Fitch made the Evergrande default announcement. Here's another comforting message from the Chinese government. China's central bank announced recently that it's pumping $180 billion into the economy to boost the increasingly slippery real estate markets. I'm not sure how this will help, since that can also contribute to more inflation, but I'm betting that they have a plan and it rhymes with no more loans for real estate developers. Anyone interested in the technology sector? In conclusion, Evergrande is too big to collapse and file for bankruptcy, and if that happened, the impact would be mostly confined to the Chinese economy. The real estate markets in China are heading towards a serious cool-off, while the technology sector is preparing for a serious takeoff. The Chinese government is tightening the leash and forcing banks along with corporations to adopt stricter debt policies. There's no global recession on the way. On the contrary, all signals point to the opposite. Chinese corporations can no longer run to the government when they run out of cash. Well, sort of. Don't listen to what the experts are talking about. Don't invest in China, because reality and facts on the ground, in addition to economical indicators, are strong and pointing that China is taking serious steps to create a more resilient, diversified national economy that's open and secure for international investors. So please, go ahead and relax. That's it for this video. Farewell, be cool, and stay freaking positive. And if you'd like to stay updated and informed about the latest international economical news topics, hit the subscribe and bell icons. Thank you for watching, and we'll see you in the next video.